All right. All right. My name is Dale Perryman. My buddy Alex is here, and I'm going to be showing him kind of how to put up a trade on Trade Diff. Our contest started today, so we're pretty excited about that. So let me just share my screen here, Alex. And this is my Dale's spreads selling portfolio. So if you wanted to follow me along maybe in yours while we do this, and what you do is you click on trade here, and then you put, say, an underline that you want to trade. So for example, Apple, if you wanted to trade Apple, so you get the chain. So can you give me an example, Alex, of something that you may be either bullish, bearish, or neutral on, and make it kind of an established company, not something that we've never heard of?
Sure. So maybe something like AMD.
AMD, which is the chip manufacturer, right? Because, you know, and just a little background, Intel missed earnings last week, and they delayed their latest chip, which caused AMD to go up a little bit, and it's down 1.61% today. So are you bullish or bearish or neutral on AMD?
Let's say bullish.
Bullish. Now, I will tell you that AMD has earnings that's coming up, and that's always kind of a danger point for earnings because there's a lot of volatility that's built into it. So after, there's something called volatility crush in options. So right after kind of all that volatility comes in. So I just want to make you aware of that. So if we wanted to do something bullish on AMD, one of my favorite simple strategies for something bullish is to sell a naked put. And so, for example, if we go into August and we sold the August 65s, let me ask you a question. If you liked AMD at $68.28, wouldn't you like it better if you could get it for 65?
That I would.
All right, so I'm going to show you a way that you could do that. What you can do is you can sell the August 65s and collect right around $3.10. So if you did 5 contracts, for every 1 contract of an option, it's equivalent to 100 shares. So if you sold the 365 August, say as you hover over it, it says buy. And if you're selling it, you really want to make sure it's sell. So if I click on sell and I crank up the number of contracts over here to say 5 contracts, I would collect roughly 5 times $3. I'd collect $1,500 in my account. And all that means is if it goes down to 65 by August, you'd have to buy 500 shares in your account. So if you just wanted to click submit, then it would submit that. So I won't do it since, but if you want to do that in your account, or if you want me to stop the share and let you share your screen, then you could put that trade on if you want, and I'll enable you to share your screen.
Yeah, sure, we can do that.
Okay.
Why not?
While I cue Jeopardy music now. Dun, 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 dun.
Exactly. All right.
All right, so if you type in AMD where it says the ticker and get chain, and then you go into August, those are the weeklies. If you go into August 21st, those are the monthlies. I like to trade monthlies more than weeklies because there's more liquidity. And liquidity is the difference between the bid and the ask. We always want it to be real tight because it's called slippage. If it's too far apart, it's almost like exchanging money at a bad money changer at the airport internationally, where, you know, they see you coming and they go, Alex, American rates just went up, you know, because it just costs you a lot of extra on the exchange rate. So go down to the 65 strike and put, and you want to hover over the sell and not the buy. So click on that. And then I'd suggest for this contest, crank it up to about 5 contracts. And you can either type 5 in there and then click submit.
Okay.
And you've now placed your first trade. Now, right there is, it shows it in. So let's develop some categories. So if you click on that top cog at the top next to trade, where it says settings at the very top, yep, right there, click on that. And then click on the word portfolio. And then scroll down. See where it says new group at the very bottom, right above archive portfolio?
Create new group.
Yep, but you type in the word naked puts. And then click on create new group. Okay. Now, while we're here, let's go ahead and create a few other groups. Let's create one called naked calls. And let's create that group. And then let's create one called poor man's covered calls. And then create that group. And then why don't we do one poor man's covered puts. And create that group. And then why don't we create one called straddle/strangles. Create that group. All right, then scroll back up to the top and click on the name of your portfolio again. Alex likes options. The one that's underlined above it. Underlined, yeah, right there. Click on that. And then go and click on the 3 dots next to AMD and put that into naked puts. You see what it'll do now is it put it into a category. And the benefit of that is you can kind of measure how each categories are doing. So you could expect naked puts to do well when the market goes up because it's a bullish strategy, especially if AMD goes up. Okay. So this kind of enables you to kind of set different groups and watch them over the next 45 days. So you've now, congratulations, you've placed your first trade.
Thank you.
Now, if you want, I'll show you a few other trades that I put on today just to kind of give you a little tutorial on maybe other types of trades, one of them being a strangle. So I'll stop the screen share with you and then I'll share some of the trades that I put on. Okay. So I'm going to share my screen here and here in the contest. I sold a naked put on Intel and Disney. Both of them were down today. I kind of like to sell naked puts on a down day. You may say, why? It's kind of like things just went on sale. You know, and you want to kind of go and put on a bullish trade when things have gone on sale. Now, I created a straddle strangle in Macy's in EWZ. The volatility was kind of high in each of these. You may say, how does that impact? Well, when volatility is high, it impacts option pricing. So options are more expensive. And when you're a seller, you like it to be expensive because you collect more premium. Okay. So you think of volatility like if Warren Buffett is selling hurricane insurance and the weather gets kind of turbulent in Florida along the coast, you know, the insurance rates go up. Mm-hmm. And if he's got a good actuary, he knows what his probabilities are. So, and he could, you know, afford a payout. So we like it when those rates go up. So let me show you, I'll show you kind of a Macy's trade that I put on here. And if you want to see the legs, you can just click on the legs here. And what I did is a strangle is where you sell both a put and a call in the same expiration. Okay. So what I'm going to do is I'm going to pull over my Thinkorswim platform and I sold the 5 and the 8. So I'm going to put in Macy's here. And just kind of to show you how I like to set up, I love to sell the 10 to 15 Delta Strangles. So this is kind of a really cheap underlying Macy's, but the good thing is it's penny wide difference between the bid and the ask. So that's a real tight, that's like the tightest possible liquidity. So I like that. So if I sold the 5 and I went down here and I sold the 17, see, that would be a strangle.
Okay.
Selling a 5 and an 8 put. So let me just do and analyze this trade, and I'll show you what the risk graph looks like on this. So I'm going to line up this next to a break-even point. This bottom curve is today's date, and the top curve is the date of expiration of August 20th. So this is showing that this trade has about a 96% probability of profit. So one of my favorite trades is to put on high probability trades. And the reason being, it's kind of like you're the casino rather than the gambler. So our break even on this trade is we start losing money if Macy's goes below $4.72. On the downside, we start to lose money if Macy's goes above $8.26. So this is a neutral trade where we really hope that it stays between this range between now and August 21st. And if it does, we collect the maximum amount of $280.
Okay.
So this is an example of a strangle / straddle. Now, if you look at, and so I did that also in EWZ. EWZ is an ETF that's in Brazil. So let me show you this. Let's see, I did the 27.50.37. So if I go into trade and I go into EWZ and I go into August 27.50. $37, collect 45 cents for this guy. So I'll do an analyzed trade on this one and show you the probabilities. Uh, 79% probability of profit. As long as it closes between the prices of 27 and 37 by August 21st, we would collect the maximum amount of $450 if we did 10 contracts.
Is there a range you like to stay between? The last one was 94%. This one's 79.
Yeah, I really like to stay in between. See this column here where it says delta?
Mm-hmm.
I like to stay in between kind of 10 delta and 15 delta. Now, in the past, when volatility wasn't as high as it is today, I didn't mind going up to the 25 delta, but it seems to me that volatility is so high on these undefined risks, and you having a lot of them on, you can really get hurt if the market goes down 600 points, right? So you one of the ways of doing risk management is Tasty Trade advocates that maybe you only trade maybe 50% of your allocation so that you could take it if that wave hits you. It's almost like a ship, right? And you're like, 600 points down, 600 points down, you're just like, oh my God, I can't take this anymore. So that's an example of, I gave you of 2 strangles and naked puts. Now I did naked calls, and that's something that selling a naked call would be something that you're bearish on. And I just chose Uber because, travel is down, people jumping into a stranger's car with COVID. I'm just thinking, and their financials don't look great anyway. So I sold an out of the money call on Uber. So if Uber goes up to 36, I have to be short 500 shares at 36, and that's your risk there. And I also sold a naked call on Tesla. Actually, I did a poor man's covered put on Tesla, where I bought the 1450 and I sold the 1400. Let's look at a risk graph on that. And so what I'm going to do is I'm going to pull this over here so I remember what it is. And I'm going to go into here and I'll show you what that risk graph looks like. So if you go into Tesla, I've been bearish on Tesla for a while. It hasn't really worked out for me because Tesla's been going to the moon. So it definitely has left a mark. I probably could have bought a Tesla with as much money as I've lost trying to maintain a bearish position on that. But so here I bought the September 1450 put. And this is called a poor man's covered put. Bought the 1450 put. And I sold the 1400 put in August. And I only did one contract. Now let's look at the risk graph on this guy. And I believe I paid, yeah. So let's look at the, oh man, I forgot to put the other leg on. Sold the 1400, bought the 1450 in September. And I did one contract. And see if I actually did this one, it would cost me $7,500 for that trade. Let me see what the risk graph looks like. After I see the risk graph, I may decide that I don't want to do that. Let's see. Let me take everything off and check mark except this last trade that I put on. So here we are at the price currently is 1446. So what I'll do is I make money on this trade as long as Tesla stays between 1192 and 1573. And Tesla is currently trading at 1448. So let me see what the probabilities look like on that guy. You know, probabilities don't look that great, but it's also kind of a neutral to bearish trade. And I kind of felt like with my other bullish things on, this just kind of served as a hedge. My maximum profit on this guy is 61.50, unlimited losses. On the downside though, my loss is limited to 24.90. I've got unlimited loss on the ups if it goes to the moon. So that kind of gives you an idea of, that's what I would call a bearish diagonal trade. And let's see, I put it into poor man's covered puts. I could also call that a bearish diagonal. So that's kind of our lesson for today. So I know it's maybe some of this stuff is like drinking out of a fire hydrant, and may go through all this and you're like, what's an option? So, So my goal is to kind of teach you a little bit along the way. Questions. Also, wait, let me show you one more thing.
Yeah, sure.
I'm going to share my screen again, and I want to show you this collaborate tab. So if you go to your portfolio, or you go to the leaderboard, for example. So this leaderboard, the spreads, naked selling, and you click on collaborate. This is something that we can share with anybody in the group. And today, Mike and I I've shared a little welcome message here. Here's a YouTube video describing the contest. Here's a video selling a naked put where I demonstrated it with Masu on how to get Boeing for a bargain. Mike describes volatility crush, which I've alluded to with you also. Here's a list of all of the stocks that announce earnings this week. And usually there's big moves around earnings. So I just posted that. And then here's a Slack group that I've created called Dallas Traders Slack Group. I don't know if you've ever used Slack, but you have? Okay, so this is a Slack group. If you'd like to join it, kind of enables, I'm here trading every day from 8:30 till the market closes at 3. So if you ever wanted to hit me up on Slack, but this is a place where we're going to be communicating throughout the duration of the contest here on the Collaborate. If you wanted to do kind of a one-on-one chat, it would be the Collaborate on your portfolio.
Okay.
So, the one on your portfolio is kind of like one-on-one text messages. The one on, or anybody that goes to your portfolio, the one on the contest one is to everybody.
Gotcha.
What questions do you have, Senor Alex?
Still early. Nothing that initially comes to mind other than maybe a lot more research myself on it, but
okay. Well, it's been said that to become world class at anything, it takes about 10,000 hours of deep and deliberate practice. And what we've created is what we hope to speed that up by enabling people to do a contest where you don't lose anything by taking a risk and trying some things out, making a mistake. Full speed mistakes award.
Exactly.
If you fall in this full speed mistake contest, you want to fall on your face from moving forward so fast rather than on your butt from inaction.
Exactly.
So hopefully that helps you, Alex, get a checkup from the neck up and get rid of your stinking thinking.
As far as weekly versus monthly, and what is kind of the thinking between when to choose one over another?
Great question. My own personal preference is I like monthlies. Why? I trade 12 different accounts, probably 30 to 40 underlyings in every account. If I start trading weeklies and there's expirations are happening all the time, I'm going to get overwhelmed. Okay. So part of it is kind of how much time do you have? What's your workload? That's one criteria. Theoretically, you could probably make a little bit more money on weeklies. On the other hand, if something goes against you, you really don't have time to salvage it. Okay. So the good thing about, and I know this is, you kind of like, yes, do this, or no, don't, but it's kind of just a trade-off. Okay. The other thing is monthlies tends to have a little bit better liquidity, and I'm a huge fan of liquidity. I keep probably the top 20 list of the most liquid underlyings, and what I'll do is I'll put together a list of that on an Excel spreadsheet, and I'll post it on our site so you'll have access to the 20 most liquid underlyings. And those are the things that I trade most often. It's my sandbox that is my preferred place to play.
Gotcha. And let's see, I have another one. Let me take a look at it here. What was it?
And you can always, if you think of questions that you haven't thought of right now, you can put them in the Collaborate tab, and both Mike and I'll be chatting about it. Now,
Yeah.
Truthfully, the option buying contest, are you in that one? I forget.
I was just going to do this.
Just do the spreads. All right. It tends to be more around getting lucky and gambling it up. So Mo is kind of the advocate for that.
Okay.
He has been known to have $200,000 swings in his account daily. So it's definitely a roller coaster.
Whole mini heart attack every day.
And fun to watch. But I would normally say nobody would ever trade a real account like that. But Mo might. Mo would. I've seen him try to day trade his IRA, so, and it wasn't really even built for options. So I'm sure. Yeah. So anyway,
as a beginner, I guess kind of what do you see as kind of the pitfalls that I should be looking out for?
If you were to trade it in a real account, I mean, right now it's a play account. So I'd say try some things, work them into categories, put together 3 or 4 over the next month. See if you can do 3 to 4 in each group that we set up.
Sure. Okay.
Pitfalls. You probably don't want too many undefined risk because of the risk of a major move in one direction or the other. So for example, if you have a whole lot of strangles, let's assume you got 5 strangles out, and you're going to get hurt if the market moves way down, or you're going to get hurt if the market moves way up. If you've got a whole bunch of naked puts on, all of a sudden you're going to have to buy all these stock if it goes way down.
Sure.
So that's kind of just the risk. You want to balance the risk of assignment in any trade that you make. Count the cost. What's the worst thing that could happen? If the worst thing happened and you ended up owning the stock, you're going to want to have enough capital in your account to maybe be able to handle that. I mean, if Macy's goes down and you got to put at $5 a share, and it goes down to 5 and you got 1,000 shares, you're going to need to have, $5,000 of available capital. Otherwise, you're going to have to close it, possibly at a loss. I just been trading some Intel. I just recently got hurt on that because I had a strangle around earnings. Intel went down about 10%, even though they beat their earnings. They just delayed their latest chip for 6 months, and the market didn't like that. So it went down 14% or something on Friday. Well, I'm lucky that I traded it small enough that I could handle getting assignment. So what I did is I'll just take the stock and then sell calls against it.
Okay.
So it might be good it's called the wheel strategy. If you Googled that, it's kind of
I think I remember you mentioning
Yep.
that. Yep.
Maybe I did. Perhaps it was at Cafe Brazil.
Maybe. Yeah.
Maybe. Does that ring a bell?
That does ring a bell. Yeah.
All right. I miss Cafe Brazil.
Yeah, that's good.
I miss mingling with people.
Yeah, right.
Without masks. All right, buddy. Any other questions?
No, I'm gonna jump into a lot of it today.
Okay,
so
cool.
I'll a bunch. But I can use the collaborate.
And if it's okay with you, I'll post this video in our collaborate so other people could watch it in the group.
Of course.
I still have about 7 people to kind of give me their information. I'll give your information to Mike shortly today. Sometime today, he'll get you. It might be after the market closes, but we'll get you on the leaderboard.
Yeah, no rush.
All right, buddy.
Awesome. Well, I appreciate it. I'm sure I'll have more questions, huh?